Hello everyone, welcome back to our channel, Malaysia Investment Channel. So if you have not subscribed, please help us, support us by click the subscribe button. It just need your one click. Okay, one click will help us so much and encourage us so much. All right, thank you so much. Today I'm gonna walk through with you Apple share price performance up to today. So you can see up to today, the share price is about USD 144 per share, right? And you can see Apple share price is still on the uptrend. So you can see the moving average, 50 days moving average is above the 150 days moving average, and and is a and that two line is above 200 days moving average, right? So everything is on the uptrend, and you can see the share price is bouncing at a support, bouncing 150 days, 150 days, and now since about June, mid of June, it has been rallying up all the way from 130 all the way to 144. So it's a bit overextended right now, and once it hit about 149, have not hit 150, it start to pull back to 142 right now, and today 20th July it start to bounce back. Today gain about 1%. Now, so Apple is on a uptrend, and I think that if we pull back to support at $132, maybe some of you investor can consider buying there if it is based on the bounce strategy. But I think according to Simply Wall Street valuation for Apple, it is actually at 116 USD per share, right? So you may not even want to buy at 132. So according to here, the 200 days moving average is 127. So will there be any chance that it will pull back all the way to the intrinsic value? May not necessary. So if you still want to ride on the trend, maybe you want to buy at the 200 days moving average. But of course, for me, I prefer to buy it below the intrinsic value, so to have more margin of safety, right? So if you're the fundamental investor, value investor, I suggest that you buy below 116, right? Even if you have your own room, maybe you want to buy even 10 to 20% below 116, right? So it may be even at $100. So $100 to 145 is a significant pullback. Will that ever happen? We need to see and observe, right? So anyway, if you have not subscribed, please subscribe right now. Okay, so let's look at a money chart. Money chart, if you can plot the money chart, right, for the past since 2012, you can see that the share price of Apple has been gliding through, touching the 50 days, and then it keep on gliding through all the way for the past few years. 2019, it has a pullback, and after that it continued to rally, and all the way during the COVID-19 pandemic, right? It started to pull back again, but since then it continued to rally. There's a certain correction during September 2020, then it pulled back again, so it's tried to consolidate, and now it continued to grind up, right? So since seems that the trend is still up, so let's look at the Heiken Ashi. Heiken Ashi candle chart. It is still actually moving up. It's still moving up. You can see if the Heiken Ashi is all green, right? So the trend is still up, guys. The trend is still up. So there's no sign that it's gonna pull back very soon. So the past two times where it pulled back was during 2018 and also the coronavirus pandemic season. Then after that, there's a minor correction during March this year. By that time, it continued to grind up, right? So we will pull back. Anything that goes up must come down. So please be careful. There might be a correction soon for Apple. Now we have looked at the chart and the share price, price action. Let's look at some fundamental valuation of Apple company. Right, again, Apple design and manufactures and markets smartphone, personal computers, tablet, wearables, and accessories worldwide. And we know that wearables actually picking up in sales. So according to Simply Wall Street, earnings are forecast to grow at merely 2.1% per year. But nevertheless, earnings have grown for about 7.3% per year over the past 5 years, right? So this is the share price. We have looked into that, right? So Apple is less volatile than 75% of US stock over the past 3 months. Volatility is quite stable. If you invested in Apple for the past 1 year, you have grown your asset or your NAV by 47%. US market have grown by 32.6%. So it has actually overtaken the broad market, right? So if you invested in Apple 5 years ago, you have grown your value by 489%. That's a significant gain. And if you include dividend, even though the dividend is not a lot, it will have grown to 531%. So that's quite a lot, right? So if you look at the distribution of average market volatility, Apple is actually quite at the high side, right? It's quite similar with the industry. Now, what is the valuation? So PE ratio is about 31.73%, 73 times, so it's not low anymore. Still remember years ago it was just trading at below 20 for PE ratio. That is where we bought a few of the shares. So according to Simply Wall Street, it is actually 21.9% overvalued. So current price, according to Simply Wall Street, is 142, fair value 116. So it's still at the overvalue zone. You may want it to pull back to the below fair value, right? Then you want to add in some share. Now, price to earning ratio, the company Apple is ranging at 31.7, industry 25.5, market is 18.6, so definitely higher than the market. PEG ratio is 15.1, is also quite high. Price to book ratio is 34.4. That's overly crazy. That is overvalued so much. Future growth, that's why it's only being forecast at 2.1%. Future growth, according to many analysts, they are projecting to have 15%, but Apple is only 2.1%, right? So not so promising there. Future ROE, expect it to be 130%, quite high there. Past performance, we have mentioned 7.3%. ROE 110%. Company ROA, return on asset 22.5%. So that's quite good. What's about the financial health? Asset is actually $121.47 billion, but liability is also not low. It's at $106 billion. So that is quite high for short-term financial position. What about long-term? Long-term, you can see long-term asset $215 billion and liability is $161 billion. So it's Apple is having quite a high liabilities or debt, right? So what about dividend? So we know Apple is not paying huge dividend for now. It's only 0.62%, right? So it means that Apple is still using all its earning to grow its company, right? So that's why the current payout to shareholders is only merely 18%. Don't think it will grow so much soon, but I think that the dividend per share has been continued to be increasing. Last time it's only 37 cents, now is $1 per share, right? So it have grown over the years. So I believe the dividend will continue to grow, even though the yield has been going down, but dividend per share has been growing. For those that have been holding Apple, congratulations. So that's it, guys. We have gone through all the performance of Apple, about the share price and the valuation. So please again subscribe if you have learned something and enjoy something. Please subscribe, support us, and till then we're gonna share to you more great videos coming soon. Thank you. Bye.